My preferred markets are the indices and the currencies. I think there's a problem in the sense that if I actually got a bid target correct, it would be very difficult for me to prove that I wasn't an insider. I didn't have inside information given my position in the market. So I would never trade stocks again, probably. I would actually just day trade. If I wasn't doing the day job, I would actually be day trading indices and currencies. As I said, those are the markets I like.
And time frame?
Time frame within the day. I do like all these. There's lots of, on MetaTrader 4, there's lots of these software packages you can buy for 20 quid, 50 quid, 100 quid. And I do like some of them a lot, and I would actually be trading on those, which is probably heresy in terms of what professional traders, or so-called professional traders, would think. But I do like those sorts of semi-automated or semi-automated technical systems I like.
Do you mean then by that that certain markets, because of what you do, that certain markets are more suited to technical analysis?
I think there are certain markets. For instance, just thinking off the top of my head, the Aussie dollar, I think, is a very friendly market in terms of trading or technical analysis trading, much more so than compared to the euro dollar, for instance. What the reason behind that is, I don't know. But there are markets, and there are stocks also, which are also much more amenable to TA. And I think that one of the mistakes that people make is that they say, well, I want to trade euro dollar. And they think of the market they want to trade first, rather than whether it's actually suitable to them or is an easy market to trade. Euro dollar is a nightmare, for instance, compared to the Aussie dollar. Maybe the Japanese yen is also a nightmare, but the Canadian dollar is a stable or an easier market to make a call on. So I think that's one of the issues that people have, that they are more sort of controlled by what they would like to trade, rather than what would necessarily make them money. For instance, FTSE day traders. FTSE is the best place to lose money on a day trading basis, because it's just the worst of all worlds. When it moves big against you, but when it moves in your favor, it tends to move in a small way, or you're late on the move. So it's just, that is a nightmare market, but most beginners go for the FTSE 100.
Do you think TA works on small caps?
Before I didn't. I think until a couple of years back, I avoided any single penny stocks, if you see what I mean. I just didn't even get involved in anything which was, a £5 million company or £1 million company, because the micro caps just seem to be very erratic and very volatile. But actually, what I've learned in the past couple of years, I've actually probably chart them more than as much as other blue chips, and actually, there's probably more interest in them. Number one, so that's good for my job and good for views on videos and stuff like that. And also the other thing is, actually, when a market, the more uncertainty there is, actually the better TA works. This is what I've seen. It seems to be the case. Or the more difficult a market is, the better TA works. So on those micro caps or small caps, which are very difficult to work out, there may be oil plays or mining plays. I've found actually I've made some of my best calls on those. So, and it's actually not normally the case that I've made my worst calls on them. It's actually I've made the best ones, or just been like any other market.